Brace for impact, because something is happening to the global financial system, and almost nobody is paying attention. It's not artificial intelligence, it's not politics, and it's not what you see in the headlines every day. The real problem is much quieter, but also much more dangerous. It's interest rates. For years, the world got used to cheap money. After the 2008 financial crisis, central banks around the world lowered interest rates to almost zero. Borrowing became incredibly cheap. Money was easy to access. And when money is cheap, people borrow more. Families took loans to buy houses. Companies borrowed to expand their businesses. Governments borrowed to keep their economies growing. And for a while, it worked. The economy grew. Stock markets went up, housing prices increased. Everything looked strong on the surface. But underneath, a problem was building. Because this entire system depended on one thing: low interest rates.
Now, fast forward to today. Inflation started rising. Prices increased everywhere. Food, energy, housing, everything became more expensive, and central banks had to react. They started raising interest rates aggressively, and that changed everything. Because when interest rates rise, borrowing becomes expensive. Let's look at a simple example. Imagine you want to buy a house. A few years ago, with low interest rates, your monthly payment was affordable. You could qualify for a loan. You could buy the house. But today, with higher interest rates, that same house costs much more every month. For many people, it's no longer affordable. And that's why housing markets are slowing down. Fewer buyers, less demand, more pressure.
Now apply that same idea to businesses. When money was cheap, companies borrowed heavily. They expanded quickly. They hired more employees. They invested in growth. But now, borrowing is expensive, so companies are changing their behavior. They are cutting costs. They are slowing hiring. Some are even laying people off. Growth starts to slow. And when businesses slow down, the economy slows down. But it doesn't stop there. Governments are also heavily affected. For years, governments borrowed massive amounts of money. Running large deficits became normal because borrowing was cheap. But now, interest rates are higher. That means governments have to spend more money just to pay interest on their debt. And that creates even more pressure on the system. This is where things start to get dangerous, because the entire global economy depends on debt. Governments depend on it, companies depend on it, consumers depend on it.
And when the cost of debt rises, everything becomes more fragile. This is why things feel different right now. The economy isn't collapsing, but it isn't growing like before either. It feels stuck. And that's one of the most dangerous positions an economy can be in. Because slow growth combined with high costs creates stress everywhere. People feel it in their daily lives. Rent is higher. Groceries are more expensive. Saving money becomes harder. At the same time, opportunities feel smaller. And that pressure builds over time. Now here's the part that most people don't realize. Even if central banks decide to lower interest rates again, that doesn't automatically fix everything. Because long-term rates, the ones that affect mortgages and major loans, are not controlled directly. They depend on global demand for money and debt. And if that demand weakens, rates can stay high, which means borrowing stays expensive and the system stays under pressure. This is why the situation is so complex. It's not a simple switch that can be turned on or off. It's a system that was built over decades.
And adjustments like this are never smooth. They create volatility. They create uncertainty, and sometimes they expose weaknesses that were hidden for years. The truth is, financial systems don't break instantly. They don't collapse overnight. They weaken slowly. Small cracks begin to form. Then those cracks grow, and eventually something gives. That's why moments like this matter, because by the time the problem becomes obvious to everyone, it's already too late to react. So the real question is not whether the system is under pressure. It is. The real question is, are you paying attention? If you want to understand what's really happening behind the scenes, subscribe, because the biggest risks in the economy are never the loudest ones. They're the quiet ones, hiding in plain sight.